Hi, this is David Reyes with Reyes Financial Architecture. I want to take some time to do a market update. It's been a while since I've given one, and I want you to pay attention to this one closely. A lot of things here happening that haven't in a long time that can affect your portfolio, your retirement. As you may have heard, the Federal Reserve lowered interest rates by 25 basis points this last week, going from around 2.5 to 2.25. Why does that matter? Well, it's the first time rates have been lowered since 2008, or 11 years. And again, that's important because the Federal Reserve only reduces rates in most cases when the economy starts slowing, when growth starts slowing. So in 2007, 2008, obviously the market had one of the worst recessions or financial crashes ever in the history of the stock market. And so one of the things I learned by doing some research that concerns me is that the last two times the first rate cut was done by the Federal Reserve was in 2000 and 2008. Guess what happened then? The market crashed. It plummeted. Now, I'm not saying that's going to happen again, but there's very few things you can find in markets that really can give you a tell for a potential turn, a big turn in the market. I call it like the Titanic. It takes a long time for markets to turn. Doesn't happen on a dime. But I'm really concerned about that, concerned for your portfolios and your retirement. So that's interesting. We have to pay attention. There's about a 60% chance the Federal Reserve is going to lower rates in the next 6 months, another 50 basis points. So again, what we're having is the world economy is slowing down. You have negative interest rates in a lot of parts of the world, in Germany and France, Denmark, Japan. Negative interest rates. What that means is that you have to pay the bank money to hold your money. I got a client that's in Ireland right now, has some money there, and they're charging her to have her money there, and she's going to move her money back to the United States. But that's a problem. And so what you're seeing, interest rates fall in the United States because a lot of the world has interest rates that are way below ours. So what you've seen is a rally in the bond market. To give you an idea how strong the bond market has been, I've not liked bonds for probably a decade. I really like bonds right now, tactically. For instance, the last 90 days, 3 months, the stock market is flat and the bond market's up 12%. Long-term treasuries, I want to be accurate, in the last year, or year to date actually, treasuries are up 15%, and so does the market. So you get a lot less volatility to be at 15% in the bond market as opposed to the stock market. And after a year, it gets really, really scary. For the last year, basically to today, for basically the beginning of October, really going into October and August of last year. So let's say the last year, you've had the stock market is basically flat for the last year. The bond market's up 18%. Long-term treasuries. I bet none of you thought that was the case. I had to look back, and I knew that was the case relative to how bonds were acting, but had no idea that was that kind of move in the bond market. So bonds are probably a good asset right now. So is gold. Gold has been on a tear, the biggest tear in many, many, many years. So there's opportunities, but more importantly, I'm concerned about protecting the capital that you have, increasing your retirement income. And so you got to be careful right now. It's not a time to be brave. The market is not our friend right now, and I especially look for in the months of October, September, October, November to probably see some lows in the market, maybe 10-20% downdraft during that time frame. So if you want to reach out to me and talk to me about some ways that you can help protect your portfolio, increase your retirement income, reduce the volatility, give us a call. Also, I'm going to be talking about these topics this weekend on my radio show on KOGO, AM 600 from 9 to 10 on Sunday. And I think it's a really good time for you to listen in. So thanks for listening. This is David Reyes. Talk to you soon.